Welcome back. Last week we spoke to the chairman of the London Stock Exchange, Chris Gibson-Smith, who has headed the LSE since 2003. The London Stock Exchange administers the largest equities market in Europe, covering companies with a market capitalization of some £2.4 trillion and annual trading turnover of £3 trillion. Chris became chairman of the British Land Company in January 2007. British Land is the UK's second largest property group by market cap and invests in prime commercial property. He is also a director of the Qatar Financial Centre Authority and a governor of the London Business School. Here now are excerpts of our exclusive interview. Chris, welcome to Sri Lanka. This is your first visit here and I hope you have a great trip ahead of you. Also welcome to Benchmark. What brings you here to Sri Lanka at this time?
Well, basically business does. The London Stock Exchange provides global markets. But all of our IT and technology is created here in Sri Lanka. So it's absolutely central to our business. And I brought the whole board, both for a visit and to have a board meeting here.
So what are your impressions of our country?
Well, having grown up in Asia, for me this actually feels part returning home. So it's a pleasure to be back. I think certainly in the UK, of course, Sri Lanka has a wonderful long, deep reputation out of history and experience. And I've enjoyed everything I've seen so far.
So are we right, Chris, in saying that the Millennium IT LSE merger has in many ways produced a win-win scenario?
It's been brilliantly successful, I think. It's because mergers so often go wrong. You know, the track record is that more go wrong than go right. But this one, the exchange world, the competition is based deeply on technology capability. That's software. And the three great things are speed, volume, and consistency. And if you don't have that, you can't compete. Millennium has given us the best in the world, which is an extraordinary thing to say, but the whole industry would acknowledge that we have the fastest, greatest volume and right now most stable technology platforms. In return, Millennium IT's revenues have grown 300%. It was 200 and something people when we came. It's 650 now. And we've given you, in Millennium, the London Stock Exchange brand. So it's transformed the way people regard the software they produce.
So what was the thinking behind this landmark deal?
We needed something special. And our existing platform had taken a standard 5 or 6 years to develop. It was quite good. It wasn't the best. And it was quite expensive. And we just needed something transformational. And Millennium was quietly, among those who really know in the industry, gaining a reputation.
As you know, Chris, Sri Lanka is on this accelerated economic and development drive, so to speak, and one of our biggest needs at this point of time are foreign investors. Now, given that the London Exchange has access to global investors, can you assist our stock market to grow in that area of foreign participation and investment?
Well, we work very closely with stock exchanges all around the world. In part we're a sisterhood, we're a network. We all tend to know each other very well as a global federation. But what you find, what the driving force comes in two parts at the highest policy national level. London is the center for the global distribution of capital. No other city in the world has anything like the resources, the people, the capability, and the sheer volume of money awaiting redistribution into projects around the world. And so it doesn't matter whether you're China or Russia or India or Sri Lanka, looking to London for capital is completely natural. And then the other thing we bring is knowledge. Exchange systems are very sophisticated and very complicated and take years to develop the totality of it. It isn't just the trading engine, it's the regulatory environment, the policy environment, the financial environment, the economic environment. And none of these happen overnight. They don't happen overnight in China, and they won't happen overnight here. And so we do a lot of partnering because we bring knowledge.
There is hope, in fact, that Sri Lanka will meet its target, FDI target of $1 billion for 2011. But of course, going forward, the targets are extremely ambitious. Our FDI numbers, however, continue to be below budget and below target, although there's been some improvement in that sphere in the second half of last year. Looking inwards from where you stand, what would you attribute this to, keeping in mind, of course, that Sri Lanka has had success in its war against terrorism and we do have bright prospects?
First, I like ambitious targets, so I think that's a good thing to do. And if you take them seriously and you don't meet them, then that spurs you on to really examine what happened, and that's critical. My sense of Sri Lanka's potential is that it's huge. But you're coming back out of the real setback of the war, and that will take some time to fully work out. I think the cultural changes, and by that I mean economic and financial cultural, to really embrace a drive to openness, which is ultimately what allows FDI to flow in, always evolves more slowly than the ambition. And so failing to meet a target when you have the ambition is a very good way of helping reform cultural, economic thinking, really. And so the more open the economy can become, then the more likely it is that the FDI targets will be met.
We will continue with this interview after the break. Thank you for staying with us. We now return to our exclusive interview with the chairman of the London Stock Exchange, Chris Gibson-Smith. Featured prominently in last year's analysis of investment inflows of the Maldives, China and Hong Kong and India. Now, in your view, what are the potential source destinations for investment for Sri Lanka?
Well, I think you always concentrate and deepen what you're already good at. So I would maintain the focus that you already have, and simply get better at it. But I think that, if you look at the range of products, well, you look at the field I'm in, what you're doing is very sophisticated and world class. What keeps you out is the fact that the major exchange systems in the Western world all have their own IT houses and are very resistant to doing what we did. In a sense, we're very happy for it to be that way. But as our reputation grows and as your success in Asia grows, I expect more and more Western companies to be looking for Sri Lankan help.
How do you view Sri Lanka's image from where you stand? What are the risks and the threats?
I think the deep image is a good image. It's of a rather special island in a rather special place, for whom people in Europe certainly have a natural affinity. You've been hit by a series of, really unpleasant events, whether it's floods or tsunamis or the impact of the war. The floods and the tsunamis, although very damaging, actually bring you a sort of attention which keeps represencing Sri Lanka in people's minds, which is, in a sense, can be then built into something beneficial. The war takes longer to build out of people's mind, but I think that's happening. An 8% growth on top of 8% growth says, yes, it's working, step by step.
Chris, if you were asked to SWOT both Sri Lanka and the stock market, Sri Lanka's stock market, what would you say?
Well, I think you're on a good path, and the 8% growth is strong testimony to that. But the potential remains huge, and it's about ambition, I think. The potential for tourism, I think, is wonderful, and it can be a very powerful industry. Spain made a decision 20 years ago to embrace tourism as a primary industry and then focused everything on it. So in that instance, it's actually quite hard to get to Sri Lanka, oddly. You know, you probably want 10 times more direct flights. Now that will come as the economy expands, but it would come much more quickly if there was a much more concentrated tourist focus. So it's about doing these things systematically.
One of the five prongs in Sri Lanka's economic vision for the next few years is that Sri Lanka becomes a knowledge hub. How would groups like yours be able to assist Sri Lanka in achieving this?
The foundation of this is an outstanding education system and a great university system. But we employed 150 Sri Lankan graduates in Millennium last year. That is, Millennium I think is something like 20% of your software sector. But if you've got that sort of expansion going on, which is then, part of it's inward directed, but overwhelmingly it's outward directed into the rest of the world, we're just a very large part of the expansion that is happening.
You mooted the creation of an international board to enable stocks to be traded in London on a revenue sharing basis. Now this also includes investors from the SAARC region, meaning that they will then be able to invest in foreign shares through this vehicle. Can you just elaborate a little more about this, Chris?
I think it's about finding ways for the exchange system to go global the way the rest of the financial system has already done. We can do it all by mergers, but that's really quite cumbersome and very time consuming. And so it's about finding other ways of trading stocks internationally. That's the sort of vision behind it. We have an international order book in London already where you can trade stocks through secondary listings, for instance. So if the primary listing is in Moscow, you can have a secondary listing in London. And that way, Russian stocks get traded very actively in London. So you can already do that, and that could be done by agreement and arrangement. The Russian finance minister sees it helpful that we work closely with the Moscow Stock Exchange in order to promote Russian business. The step beyond that, where it's not based on listings, has yet to be invented anywhere in the world. So I think it remains a dream, but dreams are good things.
The chairman of the Colombo Stock Exchange, Krishan Balendra, in an exclusive interview with LMD last year, said that, I quote, "The main challenge is to implement certain initiatives to protect investors, and one of the drawbacks that the exchange currently has is the lack of guaranteed settlements, which has curtailed foreign international investment to some extent in the market," unquote. What is your viewpoint on that statement?
Well, it's a correct general comment on how much evolution an exchange has to go through. And it's as true for Shanghai as it is for Colombo. Exchanges are only a component of the whole process of security markets. When you get to the scale of New York or London, then you also need a completely sophisticated pensions industry. You need a completely sophisticated insurance industry. You need a completely sophisticated banking industry. And all of those invest into and comment on the development of the market. But each of those can only exist if they're matched by a full government policy position, a full government regulatory position. And none of this happens in less than 25 years. So the evolution of the exchange will take place with the evolution of Sri Lanka in total.
The UK-based entity Brand Finance gave Sri Lanka a ranking of 76 in its Brand Finance's Nation Brands 100. It gave Sri Lanka a brand value of $23 billion. Of course, this is in comparison to India's $1.2 trillion. Now, when you look at Sri Lanka's brand image, as a brand, how does Sri Lanka stack up in your mind?
Brands are really important. I think Sri Lanka has a good starting pack, but it's still in recovery. And I think the world is waiting for the next level of commitment to the development of wealth, I think. I mean, I hosted last week in the London Stock Exchange the great Nobel economist Amartya Sen, who's a Bengali. And very interesting, he should come and visit. He's absolutely clear that the ability to create wealth in a society is the most important step to inventing their future. And so that is about really outstanding economic development. And you can't short-circuit it.
That was Chris Gibson-Smith. The Voice of Business is up next, where Hasita Premaratna has some valuable advice for investors. Don't go away.